Pulver report. It's 9:30. Opening bell, May 8th. Happy Monday. Trading week is the 8th through the 12th. We have some news to discuss. CPI news is on Wednesday for the U.S. We just had FOMC last Wednesday where the Fed raised 25 basis points. From the market's perspective, looks like we officially hit the pause. Earnings were pretty solid for the most part, with I think over 86% of the S&P reported earnings, and we're back into positive territory, which was better than the last couple of quarters. But let's get started. Risk disclaimer: we know there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptos, you know the deal. Social media, make sure it's me. I'm most active on this channel, youtube.com/Chris Pulver. I'm also streaming on Twitter with Periscope at Real Chris Pulver. That's my verified Twitter handle, and on Instagram as well at Real Chris Pulver. All right, let's go to the charts. Here's the SPY. We're sitting at 412. Like I said, we have news this week. Currency strength. We've got the New Zealand and the Aussie leading the way. CAD as well. Yen, dollar softer. We had a nice push on the Swiss last week on Friday. I was pretty happy to see that nice little P&L swing for some of the positions I have in Forex trading. New Zealand, Aussie pushing. Let's see if we get some breakouts. Certainly against the dollar. I was looking for a New Zealand dollar long and Aussie dollar long. And then our news this week, we go to the calendar. I'll get logged into YouTube or the YouTube channel and say hi to everybody just a moment. All right, so all low impact news today, tomorrow, Wednesday CPI year-over-year expectation is 5%. That's consensus. So this is interesting because the previous print was 5%. So the forecast is 5%. So what does that mean? Well, if we go to our inflation, I think it's a monthly line graph right here. This is our monthly, right? So if we look at all of our monthlies, we went from, let's see if I can zoom in here. The last data point would have been, I think 6%. Right in here was 6%. So 6%, then we're at 6.4, 6.5. So if it comes in at 5%, we essentially don't have any year-over-year improvement on inflation. Part of the reason we've had this melt up is we've seen inflation going down. We've seen the market price in the Fed rate hike cycle and essentially get to that pause position. So this move to the lower side on inflation has also had a lot to do with the spark and the melt up in technology and the indices in general. So I'm looking for some directional confirmation. If we look at the Qs, this week on the daily time frame, are we finally going to break above 415? If so, there's room to run to 425 and change. This August high is at 432. That could be our pre-summer push. Then we sell and may go away type thing with a slower summer. Or the Fed tried to reiterate it. This was the Fed sell-off last week from basically Wednesday, Thursday. Yeah, I mean, it's still kind of directionless. We had a nice little melt up October to now. The markets are up for the most part. Like I said, there's some optimism out there. The forward guidance isn't as conservative. We're seeing a lot of chatter on artificial intelligence coming out of earnings transcripts. And again, maybe that's just like the hot word for this quarter or the hot word for right now. Maybe getting the market all excited because it's spurring a lot of investments at this time. But still, direction-wise, it's tough to play. We have a lot of neutral directions on the SPY and the Qs. Qs are still stuck around this 320 handle. This week with inflation will be interesting. If inflation gets sticky, we might see the Qs have some heavy pressure to the downside, but there's still room to melt up and go higher as well. That puts us up towards 330 to 335. So pretty neutral. I do have some plays here where I'm looking at some bear call spreads. That's out a couple of weeks, May and June. But I might look at some neutral positions as well where I might get some breakouts to the upside. Maybe a 322 by 323 for this week. If we have any bullishness, we can make some profit. If we have any bearishness, then I'll protect some profit here with these 305 and 306 bear call spreads. Earnings wise this week, give me 1 second. I'll see how many companies are reporting earnings this week. I know we still have some. We still have some notables. And then I'll log into the YouTube channel and say good morning to everybody. Let's see here. Hello, hello. All right, nice room this morning. Donna, good morning. First to the chat. Nice to see you. Gary's here, Rex here, Linda's here, Robert, good morning. Two Roberts. Robert E, Robert S. Andrew, good morning. David, good morning. Dan, Dargis, and is that another Ann? No, Jan and Ann. Bill, what's up, man? How are you? Jacob, good morning. Ranji, good morning. Matt, good morning. All right, happy Monday, everybody. Happy Monday. Okay, so we have Wednesday, 8:30 a.m. Eastern Time, U.S. CPI, year over year expected to be 5%. That's not an improvement, right? So again, that makes it for a pretty interesting newsprint. I think there's going to be a lot of volatility in currencies that day, probably in the markets as well. It's going to come out at 8:30 a.m. So that's before opening bell. In stocks, we will be watching this during the flex trading room on Wednesday morning, and I wouldn't be surprised if we see some big movement pre-market. So the futures market might move pretty aggressively. Opening bell might have some gaps higher or lower. We might want to keep an eye on the volatility index as well, but I would assume that the market's going to be moving pretty aggressively on Wednesday. What else we have here? Look at the list of stocks from the weekend rip. Let's see, bullets from the weekend. Okay, we have another 1,000 companies reporting earnings this week. So Robinhood, Roblox, Mara it's Marathon Digital. That's a blockchain firm. A firm which is buy now, pay later. It's Beyond Meat, your alternative protein. Cake. What is Cake? Cheesecake Factory. Oh man, packing people in. Disney. Rivian has earnings this week. Tyson Foods. Western Digital. Under Armour has earnings this week. Fisker. Duolingo, Electronic Arts for video games. Groupon. Krispy Kreme. I haven't looked at that one in a while. We made some money on that one last year. $15. Yeah, that would have been a good one to buy low around $11.50 to $12. Oh well. JD.com, that is a Chinese e-com. I saw this, I read this report that Michael Burry is pretty interested in this one. Let's see, Utz Brands, that's a snack company. Yeti Holdings. Okay, so that's a lot. I mean, we had 1,100 companies last week. We have 1,000 this week with some notables, enough to kind of keep the catalyst flowing. Positive or negative, we'll find out. CPI data on Wednesday. We just know it's coming. So whether we like it or not, we're going to get some movement. Okay, so that's a good thing. Currency strength chart. I don't see any, outside of Wednesday CPI, I don't see a ton of news this week. If we go back to the calendar, that was the big one I was paying attention to for Wednesday. If we go into Thursday, well, I stand corrected. Take a look at this. Thursday morning, this is 7 a.m. Eastern Time. Bank of England expected to raise rates another 25 basis points. They're not unanimous in their votes from the Monetary Policy Committee, but another rate hike. They're sitting at 10.1, I believe. 10.1% year-over-year CPI or inflation. So raising rates and having that path continue. We're in some pretty good positions right now. I'm currently long pound dollar, which did show some promising signs of a breakout. We're trading at 26.48. I was measuring this breakout right here. So we have this high to low. If we went lower, I was projecting it there. We went higher, projecting it here. I'm looking around 3,000. So if we continue with this path of least resistance, and hopefully we do, to the upside, then I'm looking for something like 29.50 to 3,000. Take some profit on that pound dollar. It's just a simple breakout measure. But I'm going to stay long in that pound dollar position. That should be a rate hike coming on Thursday. Again, Bank of England, are they going to pause? I don't know. I mean, they in fact, for one of the major developed economies, they still have one of the highest inflation levels. Eurozone's the same way. New Zealand inflation expectations, pound GDP on Friday. So I'd say all eyes on CPI data, which is dollar basket, and then pound basket on Thursday morning. So we'll have some good currency stuff to trade this week. Let's see here. Anything else exciting? Euro Swiss, CAD Swiss. CAD Swiss, oil's come back in a pretty big way. We had that nice little Morningstar pattern from Wednesday, Thursday, Friday, right in here. So if you look at the daily time frame, That looks way different than what I saw last week. Yeah, we should have a wick low at 63.50 on the daily. Not sure why that's not showing up here. So take a look at this on the 4-hour and the 1-hour chart. I saw this. I had a chart alarm going off on Wednesday evening, right in here. So we have decision bearish, indecision bullish, indecision and then bullish. So we had bearish, indecision, bullish. That's a pretty typical morning star. I'm just not really seeing it reflected there. There's a better display. So decision bearish, indecision candle with a long wick to the south, and then decision bullish. So oil's come back pretty firmly, like I said, off these lows. I currently like, long oil from that 65 handle, right in here off these support levels, right? And that wick was down to 63. So even if we just came back up into the 200 EMA, I think there's some indecision in here. I've talked about this the last couple of weeks. I mean, it's not really clear on where we're going, but we do have a yearly pivot. So I'm focused on buying oil low and seeing if we just range back up to $75 or $80. There's some profit opportunities in there. If we squeeze higher into 90 and 95, that's fine too. That would likely translate into some, CVX, Chevron at 161. We're sitting right in between these big levels. If Chevron comes back down into this level at 140, pretty interested in another run to the upside in this one. Same thing is true on an XOM. So we did have some breakout opportunities. We looked at some straddles where as long as price stayed outside of this area to the downside or to the upside, we generate money here, we generate money here. So as long as we stay out of this, which we are, we've cleared that handle by about $10 or so. So pretty good profit opportunity there on XOM. Yearly pivot is down here towards 95. So I'm curious if this is a break, a little pause in here, and then we continue to work ourselves a little bit lower, but still watching for range trading. Something like that. Big support, big resistance. My drawing is pretty terrible this morning. Big support down here, and then big resistance up here, right there. Okay. All right. So that's oil. Let's go gold and silver. Gold sitting at 20.23. Just be careful of this. If everyone is super long on gold, just be careful. Technically, we have a 1, 2, 3, 4, 5. So even with this choppiness, making a high, making a high, making a high, this could be wrapping up that fifth wave. And again, just based on some wave structure, if we have a 1, 2, 3, we should be coming back into this area here to retest that fourth wave low. So I could see some opportunity for maybe a sell high, maybe a fake breakout. If that turns bearish, all of a sudden I'd like to take advantage of that and trade this back down towards 1850. So, I've said I'm willing to go long on gold and take some stabs at it just in case this breakout is a real deal and the dollar gets super weak. But if the dollar, firms up a little bit in the near term and gold hits resistance and starts to sell off, we should have from, roughly 2050 to 1850 worth of opportunity to sell gold. And we continue to stay possibly range bound on gold from these 2070 highs down to 1650 lows. Silver trading at 2568 with some daily divergence. So I see that we have some overbought conditions with some divergence, and that means that we may stretch a little bit higher, but again, heavy resistance sitting around $29 to $30. If this divergence holds, then we look to fall back in, possibly towards 23 to 2250. There could be a channel playing out this way as well. So if we settle into 23 to 2250, I'd look for a buying opportunity on gold, see if this channel stays. But I wouldn't really sell gold until 30. Otherwise, I'd just wait for a pullback and start buying more around 2250. But I'd stay out. I mean, I'm long. I mean, I'm long with a break even around $17, $18, and I'm trying to get this thing called away. So SLV is my play. Trading at 23.58. Again, divergence you can see. I recovered call at 24. That's out to, that would be next Friday. Not this Friday the 12th, but Friday the 19th. So I bought some put protection at 21 in case it goes lower. I put that out towards the end of the year, looking for some intrinsic value to protect my overall long positions. But if I lose the stock, at 24, that's okay. I'll still make $6 or $7 a share. I can keep the long position just in case we have a pullback, or I can just eat the debit. And it just be, I think it cost me like $100 or $1 per contract, and I'm in for 3 contracts. So anyway, watching silver. So gold and silver, watching those. 30K on Bitcoin still holding. We're at 27,890. $30,000 seems to be the difficult ceiling at this time. So we could be setting up a little bit of head and shoulders right here. If it breaks the neckline, corrections coming back down towards 20K, resistance and support. There's going to be a lot of volatility inside here. Open spaces, we got to break the highs and want to keep going higher. If we poke the highs but we reject, I would expect that to be a bull trap. Okay, what I'd like to see is we want to see price thrusted up here, breaking this high, pull back and retest, and then go. I want to see a very clear, decisive break above 31,000. Because if it just comes up to test it, my concern is that we test it, we wick up here and we fake out a bunch of traders, and we come back in and we possibly reset to 20. So don't be too cute up here. I wouldn't be surprised if some bear call some option plays if you want to play some of those mining companies. If we have a drop, if you want to trade Coinbase as well, we might have some opportunities to sell. But I still like buying, 20K, hoping to, of course, get back up to 30K. That's profit opportunities and a breakout to go much, much higher in the medium to long term. Okay, morning, Everett. How are you? Catherine, good morning. So that's my little Bitcoin outlook for right now. 30K resistance. Ethereum holding resistance here as well around 2100. That's a past wick low resistance here. And same type of thing. If it's, high to low, really choppy, really choppy, really choppy, comes right back to these highs. Two things. One is we break, retest, go, and we need to be, aware of that breakout with tight stop losses, or we fall and break down. And we come back into equal lows, we come back into equal lows. This resistance holds. We have major support down here that I consider buying. So again, watching price closely. All right. Any requests for today? Any charts you'd like to take a look at? Look at NASDAQ futures. What is futures doing right now? Let's go to Market Watch, take a look at the dashboard. Snowflake IPO. Oops, I'll just hit the home page. I just want to look at the futures dashboard. Futures market is pretty flat today. Dow Jones futures dropping back into flat. S&P futures dropping back to flat. NASDAQ futures down actually a little bit more. So NASDAQ for the most part has been our best performing index this year. The ETF has done pretty well. If I go into, do I have a snacks? So last week's move, Dow Jones down 1.24%, S&P down 0.8, NASDAQ was still positive at 0.07, Bitcoin was up just shy of 1%. So the Dow Jones has been taking it a little bit harder with some indecision. Big resistance up here around 340. And last week's sell-off, we had a really huge day actually on Friday. So considering we closed here on Thursday, we gapped open, we might see some early fills, especially with Wednesday's CPI data. Same thing here on the SPY. We closed here on Thursday. We gapped open and pushed aggressively on Friday. So this gap may fill, especially if we don't cross this 415 resistance, right? So we might come back and fill this gap entirely and be looking at more indecision, more red for the next couple of days. But if it fills a gap, then CPI is really a 50-50 trade. CPI is good as far as what the market wants to see. Then maybe we justify a bullish move. CPI is bad. We start potentially breaking down. I'd say this week, if we get below 403 or we get above 415, I'm looking for some direction. I'm trying to avoid trading inside of this right now. It's very indecisive, and that goes for not just the SPY but the Qs and the DIA. The Russell, the IWM, Russell 2000, again, Thursday's close, big gap noticeable right here. Close Thursday, open Friday. That's a gap that could get filled. If the IWM comes back down here, we will talk about this in class in the next couple of minutes here when I start equities on demand for the trading room. I'd like to look at some IWM bull put spreads right in here. And I might even look at a longer dated bear or actually just a long put and see if we have a sell off to maybe have some protection. But if we're right and we put in some lows in here, this level support around 163.50, this level support, I don't mind looking at some long positions out for the rest of the year. Okay, so we'll talk about that in a little bit. But there's potentially range trading here on the IWM. Small cap. So even if we had like this crazy implosion, A long put around 160 to 162.50 isn't a bad play, and look at some potential profit here if we have this big catastrophic drop off. So, and again, I don't know. I mean, it's crazy to see we are witnessing some of the largest net positioning that we've ever seen. So the contrarian signal suggests that we're probably going to go higher and melt up higher. Fixed income, we'll take a look at that this morning as well. And equities on demand. I mean, I want to look and see what's the 12-month CD trading at. What are the the 3-month, 6-month U.S. Treasuries trading at? Is it still trending higher with the rate hike that we had last week? Maybe. I mean, it's possible we might have a five and a quarter 3 month. That'd be crazy, right? I guess I can look. So if we go U.S. 3-month, we're trading at 5.1. So I can just look at some of those fixed income vehicles, but we're probably getting well over 5